Monday night, and we're back with your daily dose of corporates and market. You're watching Corporate Central. I'm Shrestha Tiwari. Let's take a look at the corporates and market stories starting this week. The board of Z Entertainment Enterprises has formed an interim committee of senior executives to run operations at the company after Managing Director and Chief Executive Puneet Goenka failed to get relief from SAT against an order by markets regulator that barred him from holding any key position in the listed company. In an order passed on June 12, SEBI had barred Goenka and his father, Subhash Chandra, from holding any key managerial positions in any listed entities for alleged siphoning of funds. Air India incurred significant write-offs amounting to an estimated 7,000 crore rupees during the financial year 2022-23. According to a media report, these were primarily attributed to the carrier's faulty aircraft and engines as well as losses incurred by low-cost airline Air Asia India. The report says that despite these, Air India managed to reduce its losses and achieve positive earnings before interest, taxes, depreciation, amortization and restructuring or rent costs at an operating level. Air India, along with its subsidiary Air India Express, achieved EBITDA positivity and neared break-even after meeting lease rental obligations in the first year. Air Asia India accounted for most of the losses, with the net loss for the year estimated to be slightly over 2,500 crore rupees. This marks a significant improvement compared to the previous financial year when the airline reported a loss of 19,556 crore rupees. And the Maharashtra government has approved the Adani Group's bid for the Dharavi redevelopment project that seeks to transform Asia's second largest slum cluster. The Maharashtra Housing Department granted final approval for the appointment of Adani Properties for the redevelopment of Dharavi. The approval comes after 8 months after Adani Realty was declared the highest bidder for the redevelopment project with a 5,069 crore rupees bid. Meanwhile, amid reports that 3 private equity firms are in talks for a binding bid of Gautam Adani's 7-year-old shadow bank Adani Capital, it has now emerged that Bain Capital is reportedly in advanced negotiations to close the acquisition. The company is owned by Gautam Adani, who holds 90% of the firm, and former Lehman Brothers and Macquarie investment banker Gaurav Gupta, who holds around 10% in the company. Reportedly, Bain is expected to pay up to 1,500 crore rupees for the company, or twice the book value, and infuse 500 crore rupees of primary capital through equity. It is still unclear if the management team will retain a small stake in the company. Reliance Brands, a subsidiary of Reliance Retail Ventures, is holding discussions to buy actress Alia Bhatt's children's wear brand Edamama for 300 to 350 crore rupees, according to a report. The acquisition is likely to strengthen Reliance's children's wear portfolio, which at present includes the value fashion chain Trends and India rights to Mothercare. Edamama is an over 150 crore rupees brand that is primarily sold online. According to filings with the Registrar of Companies, Bhatt is a director at Eternalia. An agreement between Reliance and Edamama is likely to be signed in the next 7 to 10 days, and the deal gives Reliance a greater leverage in the kids' wear market. Edamama was launched in 2020 and later extended its product line to include teenage and maternity wear. And promoters of Jindal Steel and Power, led by Naveen Jindal, are in talks with the global private credit funds and foreign banks to raise up to $3 billion, which will be potentially used to increase promoter holdings. The talks with lenders are at a very early stage with no certainty of a transaction, according to a report in the Economic Times. This deal, if it takes place, will effectively mean that promoters are raising stake through borrowings. JSPL is one of India's largest steel producers. The promoter currently holds 61.2% in the company. Tata Consumer Products and Wipro Consumer Care and Lighting are in the race to buy a majority stake in Chennai-based Achi Masala Food for 1,000 crore rupees, sources have said. The company, whose revenue stood at 1,660 crore rupees and its net profit at 21.7 crore rupees in FY22, has become a takeover target of various larger players. If the deal goes through, then it will be a valuable addition to Wipro Consumer Care and Lighting's portfolio in the ready-made masala market. And from corporates now to these stocks of the day and also analyze the reason behind it. First up is shares of stockbroker Angel One, which plunged 6.72% to hit an intraday low of 1,593.45 rupees on Monday after SEBI imposed a penalty of 1.66 crore rupees for alleged violation of the capital market regulations. Apart from the fine, SEBI has prohibited the company from onboarding new authorized persons for 6 months starting July 14, 2023. This is after SEBI recorded an alleged failure on Angel One's side to monitor the operations of its APs, thereby resulting in a violation of the capital market segment regulations and futures and option segment regulations. Shares of Avenue Supermarts, which owns and operates the supermarket chain D-Mart, declined almost 4% to 3,694 rupees on the BSE after the company's June quarter numbers disappointed the street. The D-Mart operator reported a 2.46% rise in its consolidated net profit at 658.71 crore rupees in the April to June quarter, as lower sales of apparel and general merchandise impacted the margins. The company had posted a net profit of 642.89 crore rupees in the corresponding quarter a year ago. Global brokerage UBS has maintained a sell rating on the stock with a target price of 3,700 rupees. HDFC Securities too is bearish on the stock and has assigned a sell rating with a target price of 3,200 rupees. Sterling and Wilson Renewable Energy Limited shares gained 13% on Monday after the company reported a positive gross margin during the June quarter after 9 quarters it being in the negative territory. Gross margin for the Shapoorji Pallonji Group company stood at 11.3% during the June quarter. An increased operational leverage or falling fixed costs is expected to drive Sterling and Wilson Renewable Energy's earnings before interest, taxes, depreciation and amortization turnaround by the third quarter of the current financial year. Brokerage firm Nuvama has recommended a buy rating on Sterling and Wilson Renewable Energy with a price target of 454 rupees per share. Well, that was all about corporates and markets for the day. Moving on to some important corporate events and triggers, and which are those that could make big market impacts. Let's take a look. On July 18th, it's day 2 of the IPO of NetWeb Technologies. IndusInd Bank and ICICI Lombard, ICICI Pru Life and LTTS Polycab results will be out. And globally on July 18th, US June retail sales IIP figures will be released. That is it tonight on Corporate Central. Until tomorrow, log on to Money9's website and the app for exclusive personal finance content and keep watching Money9.